The Fed finally had their first meeting and their first rate hike since 2018. We're going to discuss, obviously, what that means for markets in general and what that means for Bitcoin. Ukraine has finally legalized crypto. We will also talk about the implications of that and much more. I have three incredible guests today. Jurrien Timmer, the Director of Global Macro at Fidelity, Paolo Ardoino, the CTO of both Bitfinex and Tether, and Christopher Temme, the CFO, COO of BitFlyer in the US. And then we'll just see what happens. As you guys know, this is the weekly Thursday roundtable. Let's go.
Let's go.
What is up, everybody? I'm Scott Melker, also known as the Wolf of Wall Streets. Before we get started, I'm under contractual obligation with YouTube to tell you to subscribe to the channel and like the thing. Do the thing where you like the stuff, and we'll move on from there. Guys, as I said, so we've been feeling out this new concept here on Thursdays. This is the third or fourth week. I literally can't even remember. We were going for over 2 hours before with upwards of 9, 11, 12, 15 guests, people popping in. It was awesome, but a little much. So we're going to try to have a bit of a shorter conversation, around an hour, with focused on a few people each week, which I think will be superior. If you guys missed it, I sort of casually yesterday in the live stream decided on air, because that's sort of my nature, to make my newsletter that has been both paid and free for the last few years completely free. So that started today because I apparently decided that I hate money. So that is now free, and you guys can check that out down below. And otherwise, I want to go ahead and bring on the first two guests who are here now. I've got Jurrien Timmer, as I said, from Fidelity, and Paolo Ardoino from both Tether and Bitfinex. How are you guys doing today?
Good morning.
Good morning. Thank you, Scott.
Paolo, I don't know if you know, but we woke Jurrien up really, really early this morning. It's like 6:30 a.m., I believe, where he is today. So I appreciate, we very much appreciate you showing up this early for this. So listen, guys, I think the big story right now, obviously, or the biggest first story worth discussing, is the Fed, right? So we sort of had this expectation. We've had, depending on the week or the month, different expectations of how much they would hike, if they would hike, how many hikes we'll have this year. To me, it always sort of feels like a dog and pony show, to be quite honest. But Jurrien, listen, you're the master of all things macro. I would love first to just get your take on the Fed.
Yes. So my take all along has been that we can obsess about whether they start the cycle with a 50 or a 25, and whether they go 5 times this year or 6 or 7. To me, none of that really matters or mattered. What mattered was, where is the cycle going to end? Like, is it going to end at 2%, at 2.5%, at 3%, less than 2%? And to me, that terminal point for the cycle is what matters, because if inflation is at 8%, presumably going down to, let's say, 5% in the next year or two, or 4%, who knows? If the Fed only goes to 2%, that would still leave the Fed very, very accommodative. And so the big takeaway yesterday was that they moved the goalpost to a higher ending point. So if you look at the median dots, it suggests that the Fed's going to go to the middle to high 2s. And that certainly was something new for the markets. And to me, the Fed actually kind of scored a win yesterday, because if you remember, of course, in December was when the Fed started moving. It started talking about tapering fast, going from taper to turbo, in order to then get to the finish line where it can start raising rates, and that essentially served to jawbone the markets into tightening for the Fed. Because remember, the Fed only sets the Fed funds, the overnight Fed funds, which is a rate that banks use to fund, to borrow from each other. And in these days of very vast excess reserves, that rate really, it doesn't really matter. Like, banks have other ways of funding. They're not going to go to the Fed funds window to take care of their funding needs. So the Fed funds rate, which is the actual policy rate, is really just symbolic. So it's the market that does heavy lifting. So 2-year treasuries, 5-year treasuries above 2%. That's the transmission mechanism. And what's happened recently is, with the war, between Russia and Ukraine, obviously inflation expectations went through the roof. We all know what happened to the price of oil and wheat and nickel. That caused TIPS break-evens to really widen, and that in turn caused real rates. So if you take the nominal treasury yield minus the TIPS break-even, it caused real yields to fall. And so in a matter of a few days, about a week or two ago, all of the Fed's accumulated gains of having the market tighten for them, which would be represented by real rates becoming less negative and maybe eventually even becoming positive, all of that work was undone because inflation expectations just kind of went way up. And with the actions yesterday of the FOMC meeting, they kind of righted that ship. So if you look at the real yield, nominal minus TIPS, they significantly tightened yesterday, and I think that was probably the goal for the Fed. And in that sense, if you measure it in those terms, the Fed kind of got what it wanted.
I'm bringing on Christopher Temme as well from BitFlyer. How are you, man?
I'm doing great. How are you doing?
You just joined. So we're talking we're talking the Fed and inflation. So Jurrien, I have to laugh a little bit because less negative, right? I mean, when you think about this, just you zoom out, it's like I said, to me, it's sort of a dog and pony show, right? We talk about what the end game is, 2%, will it be 2.5%? Whatever it is, it's going to be a much lower high. And it seems like they can never push, right? They can only push so far. And that continually is getting low. It's kind of like the bouncing ball.
Yes. And,
right?
and it's amazing that over the past 2 years during the pandemic and post-pandemic, 2 years ago, almost to the day, actually, March 2020, the 10-year yield was 0.3%, very briefly. Today, it's about 2.2%. 2 years ago, the 10-year real yield was minus 1%. Today, it is minus 1%. So you had this huge move, a 200 basis point move from almost zero. It is a big move, especially with convexity of the bond market playing its role. And the fact that real yields have not moved is pretty remarkable. And I think it tells us a few things. One is that the economy, of course, is highly financialized and levered to low rates. We have a demographic overhang where investors are solving for income and they're not getting much from bonds. But when bond yields tick up, that does move the needle for them. And actually, it brings me back, and I think we may have talked about this in previous times. It brings me back to that 1940s playbook where the Fed, which was not independent yet, its job was to monetize the war debt, which tripled, right? Debt to GDP tripled from 42 to 46. Fed's job was to monetize that, so they increased their balance sheet tenfold, and they kept bond yields at 2.5%. They put caps in place, and at certain points along the 40s, the inflation rate went to 20%. It didn't stay there very long, but you had these huge waves of inflation, and so you had negative yields, of more than minus 10, minus 15% at times. And so I think the analogy fits in many ways, but that's kind of the world we're in these days.
I think that the people here, first of all, I want to make it clear, you guys can also talk to each other and don't wait for me to ask questions. I really want it to be a roundtable. But I think, that we now have some clearly on what the plan is and what's going to happen. But what does it mean for crypto, right? I mean, what does it mean for Bitcoin? I think that's the question. Paolo, you obviously saw this happening. You've been seeing this in real time, and you probably have your finger a bit more on the pulse of how this is actually affecting things in real time.
So I think that one of the interesting things is the impact that this could have on stable coins. So stable coins really make their revenues based on the investments of the portfolio. For example, imagine treasuries, right? So this, given the size of Tether that is around 80 billion now, and the size of USDC that is around 52 billion, that could be significantly increase the profitability of stable coins, first of all. So that's something that hopefully is a trend that will continue over the next in the next year. When it comes to Bitcoin, I don't know. I think that the the volatility of Bitcoin is really easily eating up those 25 basis points. So we have definitely been seeing an immediate reaction during the event. But I don't think it will be one of the main factors for the increase of price of Bitcoin, decrease or whatever, right? So it's in a certain way almost negligible. Who is going to enter in the Bitcoin market for, in my opinion, is going to do so for for the long run, hopefully, right? It's like a bunch of hodlers that we have been seeing a decrease of supply on exchanges of Bitcoin holdings on exchanges. That is meaning for me that there is a lot of interest from big players in accruing their cold storage, increasing the size of their cold storage. So I think that they are start to enter back into the market for the longer run. But yeah, I think that part of really time for just the pleasure of an immediate volatility that happened yesterday, and nothing really changed for the long-term Bitcoin forecast.
Yeah, but I guess zooming out, even less specifically about the rate hike yesterday, I think there's been sort of a large narrative here that obviously Bitcoin did well in this inflationary period, right? And that there was fear that the Fed in general tightening could have, headwinds for Bitcoin, could present some downward pressure. And we've seen price obviously go down generally in that time. Kind of like a cognitive dissonant thing, I think, because obviously Bitcoin's supposed to be an inflation hedge, and then Bitcoiners now are pissed off that the government's actually saying inflation is a problem and dealing with it. And you have this sort of situation where now Bitcoiners want the price to go up, and a lot of them are cheering for more money printing, seemingly, right? But do we think that this is part of the macro reason that Bitcoin's price action is doing what it's doing right now? Or do you think that this is just Bitcoin price action? Chris, I would love to hear your thoughts.
Yeah, it's as we noticed, yesterday's announcement didn't really impact the prices too much. And what you said earlier is kind of interesting, that a lot of early adopters were looking at Bitcoin as inflationary hedge, geopolitical risk hedge. But as more institutional money is coming in, we'll see that kind of ethos is actually changing, and it's looking at more of a trading vehicle, right? So BitFlyer, of course, is a Japanese exchange. That's where we have our roots. And in Japan, they were very early adopters of Bitcoin as a trading class, as a trading asset, while in the US it's always been more of like an ethos and an ideology, right? And so in Japan, they were able to really take advantage of those price changes. But as I said before, as more institutionals coming in, you'll see that there's a greater correlation with the greater market. So yes, what you said is true to a certain degree, but as more regulation comes in and more institutional comes in, you'll see that kind of a price volatility, hopefully, not hopefully, or, for better or worse, kind of stabilize, and there would be a greater correlation with the greater markets.
Yeah, I mean, to some degree, Bitcoin's been less volatile than other markets for now, right? It's kind of a funny narrative. People don't think, obviously, Bitcoiners look at 69K and then they see 40K and they think it's been extremely volatile, but it's been somewhat sideways. And both Paolo, Chris, you guys both just mentioned institutional adoption. I mean, you guys are the original institutional adopters of crypto, right? I mean, Fidelity's been in since 2014, 15, 16, I don't know, but you guys have been largely ahead of the curve. Do you think that others are following? Is that really the narrative here?
I think so, and just to add to what was just said, in some ways, I think back to gold during the financial crisis, and I think to Bitcoin today, and some parallels, right? So Bitcoin, obviously, it has all the value propositions that we all know and love. It's a shelter from the storms of regulation or not regulated, border controls and all that stuff, and certainly lines of the last few weeks emphasize even more what the value prop is for Bitcoin. But ultimately, when you are in a time of financial stress, and with the sanctions, and you saw the LIBOR OIS spread tighten up. So whenever there is a funding crisis, and certainly the financial was one of those, and of course Bitcoin wasn't around then, but gold was. What we saw back then was that gold did great as a safe haven until the margin calls came, and then was a source of liquidity. Everything else, right? Everything except for cash was up because those were sources of liquidity. And my guess is that Bitcoin didn't move much in the last few weeks, but Bitcoin still had that problem because it money to buy it, and if there's leverage in the system and margin calls, not for Bitcoin but for other assets, and there is a funding need, maybe Bitcoin is the last thing someone wants to sell, but they may still have to sell it, and I think maybe see volatility, and we see it early on when the headlines started coming and gold went way up and Bitcoin went down, that maybe there was an element of that. But to Chris's point, the store value argument, I think, is as strong as ever, but it has gone on the back burner a little bit, right? So in 2020, of course, when excess money, which we measure as M2 minus GDP growth, it went to like plus 40%. Numbers we've basically never seen except for a very, very few times in the market's history. But with fiscal kind of on the back burner, and we've gone from fiscal impulse to fiscal drag, build back better. We don't know if that's ever even going to happen. And we're 6 months from a midterm election, and of course the Fed is now rapidly taking the punch bowl away. And of course we can talk about where it's going to end and whether that will still be accommodative. Like you said, Scott, lower highs. I think that's probably likely, but that doesn't help the narrative right now that the punch bowl is being taken away. So that value prop, I think, is kind of on the back burner, but that's a long-term value prop. And I think, and beyond that, I think the volatility, as about in the past, is probably a feature rather than a bug, right? If there's if there's never a supply response, then any move in demand, up or down, is going to have an outsized function to price. It's really just that. And then on the regulatory side, we saw the news from the executive order from the Biden administration. That hasn't really moved things, but for institution, and I'm not speaking for anyone in particular, but the volatility obviously is a barrier to entry because you need to be accountable to the board or your CFO or your trustees for something that's volatile. And the regulatory risk, of course, is one as well. And I think prudent regulation, which not all would be happy with, I think actually would go a long way to legitimizing the space. And I think for institutions that would be a plus.
Yeah, Facebook stock dropped 30% in 10 minutes in after hours trading, right? So like the volatility argument is kind of nonsense. I mean, literally every fund in the world has probably some exposure to Facebook stock, which went down, Meta, we'll call it 30% overnight. And that talks about, so you just sort of, I think, touched on a very, very important point. Bitcoin often is the only thing you can sell. If it's noon on a Saturday Eastern Standard Time and you get really bad news somewhere in the world, you have to wait till Monday to panic and sell your other assets. But Bitcoin's always available to sell. It's almost like you talk about a feature and a bug. It's amazing that we have a 24/7 market, but we need the rest of the markets to come 24/7 for people not to dump their Bitcoin anytime they need liquidity. Paolo, do you agree?
Yeah, just quickly on the previous point, I like one of the things that I'm more interested in is the pricing of Bitcoin with that should comprise of multiple variables. One is definitely, as Chris was saying, is the ability or actually the use of Bitcoin as a traditional asset class eventually, but also we have to factor in the other variable is the resistance to control in a certain sense, right? So the fact that can be used by Ukrainians to help them with in the situation they are. So that is another variable that has, the price component of Bitcoin has multiple variables. So we said two, and then there could be, for example, the hashing power. So the rush of a hash rate that keep going up, and there are a ton of investment in mining now. So the competition will increase the cost. So will diminish the return for miners, or will be reflected also in the price. So I agree that nowadays we are seeing more and more Bitcoin as a standard trading asset, but there are two sleeping components that eventually will wake up, and it's really hard to understand when they will wake up, but they are there, right? So and ready to possibly go. When it comes to the traditional markets, I really wish that we would settle for 24/7, 365. Definitely is more challenging for the operations, but it has to be in this way. There is no reason for closing during the weekends. Only most of the time, only big institutions can really appreciate or can be moved faster than the others when the market is closed or is going to open. The beauty of the 24/7, 366 is the equal opportunities for everyone. Everyone has access to this very same liquidity. The same ability to cover their potential losses and also taking opportunities. So I believe I cannot see how. So we are seeing the traditional exchanges start to offer crypto-related products, and for that reason, it has to eventually, if these products keep growing and growing, and there will be more and more of these products. I believe that traditional exchanges have to settle with and just hire a bunch more people to run the operations all during the weekend. And also, interesting enough, we know really well, BitFlyer and Bitfinex, we have been operating since quite a long time in this market. We know how difficult, but also it's quite more challenging designing systems that you can upgrade seamlessly without having your users to have to be affected, right? So it's also a more interesting technological challenge that in one way or the other we had to learn to keep, because our sector is super competitive. So we had enormous advancements in terms of technology just because we were forced to serve markets with the same quality standards in terms of latency and performance and so on that the traditional finance. On the other side, more aggressive requirements when it comes to uptime.
Yeah, the old system maintenance at inconvenient moments that seems to happen on certain exchanges. Christopher, what do you think?
Yeah, no, that's absolutely true. Like crypto never sleeps, and the markets are 24 hours. And as Paolo was saying, we learned to swap out engines while the airplane's in mid-flight, right? And it's a good thing that being a global exchange, right? We're regulated. BitFlyer is regulated in Japan, in Europe, and here in the United States. That we have a very distributed team, so we definitely follow the sun. And so it's good that we have 24-hour operational team in place. But at the same time, Paolo, this probably you probably could relate to this very well. But cash and crypto move at very different speeds, right? So when there's a lot of price action over the weekend, we're getting calls from our institutional account holders asking for credit lines on Saturday, and then we promise the wire will hit your accounts on Monday morning. Here's the proof, it'll be there. Trust us, which is fine, and we have great relationships with our institutional account holders, so we could accept that. But then there's other solutions out there that can move the cash or the cash equivalents during off hours and 24 hours a day as well. So it's a very exciting place to be, and it's a lot of fun. Many sleepless
Is one
nights.
of those called Tether by any chance?
Pardon? Oh yeah.
It's one of those.
we could talk offline about that. So yeah.
But I would just add, with the 24/7 stuff that, as you point out, over the weekend, Bitcoin become the order for what is the shit going to hit Monday morning when the S&P futures open, or Sunday night, I should. But part of that is sort of is due to the fact that in recent months, as and for whatever reason, maybe because there was too much leverage that Bitcoin has been acting in part kind of like the Nasdaq, right? It is kind of that a little bit, which of course is unfortunate because it's so much more than that, or it shouldn't be any of that. But as tourists join in and they use leverage, taken on a little bit of that persona. And so I think that's one of the reasons why we see these move over the weekend, because you could just as easily argue that if Bitcoin was considered a risk-off asset in times of turmoil, that it would act like the dollar. And so that if there were bad headlines happening, that Bitcoin will be going up as a contrarian indicator. And maybe that will happen over time. But I think part of the problem with this is that kind of typecast right now as a speculative vehicle, correctly or incorrectly, and that moves in lockstep over with other risk assets.
Yeah, to me, the correlations are obviously temporary. So, Jurrien, you said, I remember it was like last year. You said Bitcoin could be $1 billion a Bitcoin by 2038. I think, if I remember correctly. So, when you zoom out, does that change? I mean, is that still?
Well, I will clarify that was definitely not a prediction, but that was.
I know it was not a prediction. You said a possibility, a remote one.
You're not alone in taking a number from a model and saying, Fidelity says. But my conservative guideline has been all along pretty much that 100,000 in the next year or two, I think, is a fairly safe number. And it's just based on my supply and demand model. And the supply model is really just me reverse engineering Plan B stock to flow model. Not because I'm trying to make a better version of it, but because I just want to understand it. And the best way to understand a model is to try to recreate it. So, with all respect to him, of course. But to me, the supply model, it left me somewhat unsatisfied because you need to have a demand function. Otherwise, scarcity doesn't really matter, right? You can have really scarce. And if it doesn't have value, it still doesn't have value. So the S-curve model, Metcalfe's law, I've done a lot of work on that. And so that has the same kind of, exponential growth curve. And to me, where the two models line up, which is 100,000 by 23, which is only a year away from now. That to me is kind of the highest confidence number. From that point on, the lines still go up, but they go up at different degrees, right? The stock to flow just keeps going to the moon. And I think that becomes less and less useful because I don't think that mathematically that makes sense. But the demand curve, you follow, internet adoption curves or mobile phone adoption curves from years past, you get this kind of asymptotic demand curve. And so it keeps going up, but at a slower rate of change, sure, which makes sense because more and more people adopt it, and therefore the growth becomes less robust. So it's up and to the right, but it's just a question of how much and when.
It's all that matters. Jurrien, I know that I think you might have to leave us, correct, for another call. So thank you so much. And now I'm going to dig in with Paolo and Christopher. Really always appreciate your time. And I have to say really quick before you leave, and we never got to talk about it, but the Fidelity Bitcoin First report was like the most mind-blowing piece of Bitcoin literature that I've read in years. So I absolutely loved it. I've talked about it endlessly, and I thank you guys for that.
My colleagues at Fidelity Digital Assets do great work, and that was a great paper. Absolutely. And I totally agree with it. Yeah,
same. Thank you.
Right. See you, gentlemen.
Thank you.
So, guys, what kind of world? And I like, as he said, the long-term predictions. It's always fun and it's whatever. But even at $1 million Bitcoin, how fucked is the world where Bitcoin has to be $1 million or $1 billion? Like, what is a dollar worth if a Bitcoin is worth $1 billion in 2038? Is it full Mad Max? Like, we've got our armies of minions and we're going to Gastown in the RV. I mean, what's happening there?
For me, is not necessarily there is going to be a Mayhem. It's also possible that the world will keep growing its appreciation of this asset, right? So in the end, there are 21 million Bitcoin. It could be like really store value. I think that with 1 million a piece, it could match the gold market, right? The gold total market cap, pretty much. That is almost there, right? So I can see how Bitcoin could become the next reserve asset in replacing gold, right? So gold is not transferable. People that are trying to fly from war zones definitely would have an easier time to bring 24 words or 12 words with themselves rather than some heavy gold bars, and is also self-sovereignty. I believe that people will grow appreciating the ability of controlling their own wealth, independently from the fact that they are living in a really nice country, like without any problems, maybe like Switzerland, or they are living in a country that is under heavy pressure now, like Ukraine, or just a country that unfortunately is not that rich, for example, like El Salvador, where Bitcoin is appreciated because it's just a way to get access to a banking system, right? Or a financial services that for the majority of the population was not available till a few months ago.
Yeah.
So Bitcoin at 1 million, it's not, I don't necessarily, it could be a world that we don't recognize, except it doesn't have to be doom and gloom, right? Because we have other like crypto kind of assets and, cryptos being introduced to it for in other ways and industries as well, right? So this isn't people trying to, bury cash underneath the mattress, but it's going to be more, like you look at the things that are happening in like Web3 and DeFi, and it's more of a larger crypto ecosystem than necessarily like Bitcoin maximalists per se. Right? So then when you talk about a world where Bitcoin's at 1 million, I vision a world where more like crypto, not Bitcoin being at 1 million, but crypto being more ubiquitous in our day to day. So.
Yeah, I think I was thinking more about 1 billion and being like, that's 1,000 times a million. That's pretty big number.
I'm okay with it.
Yeah, I was gonna say when you're when we have to start talking about the richest men in the world being quadrillionaires as a result, that I think it's definitely a different world. So Paolo, you obviously you touched on Ukraine, Russia. So you guys were just in the news, Tether, as usual, with obviously being asked, like many exchanges were, to sanction Russian users, correct?
Yeah, so we were asked from the Vice Prime Minister to take action. So, of course, on our side, it's important to distinguish between a war that is wanted by the Russian president and a war that is clearly not wanted by Russian citizens. So we have seen many Russian citizens demonstrating in the streets, also at the risk of their own health and freedom. So I think it's important. I understand the frustration, so I'm not denying that, but also it's important to be also faithful of a technology that was born to provide freedom and not over control.
Yeah. So you basically said what?
So Tether, of course, is a centralized stablecoin, right? So it has to comply with international sanctions. So there has to, in order for Tether to take action, there is need of our regulator to specifically required to take action, but also taking action on a blockchain is there is no easy way to identify who holds certain assets on blockchain, right? So everything is distributed. The accounts are not easy to be linked to Russian people, for example. So one thing is the primary market. So Tether has a primary market. So when a customer goes to the Tether platform, wants to issue directly Tether, that is where we could take action if we are required, right? And also using the banking in the banking layer, you are already basically, even willing or not, you are already limiting the access to Russians to the primary market of Tether. But the secondary market is a different thing, right? So the secondary market is free, and also has to be, any freeze has to be specifically required by a regulator.
Right.
Yeah,
Chris, how are you guys dealing with it? Yeah.
Yeah. I mean, well, first of all, we have countermeasures in place that, we, like I said before, we're regulated in Japan, in EU, and the US, and as such, even before what's happening in Ukraine, we've had a very specific risk appetite. So we've already included and excluded certain markets depending on signals that we get from our regulators. So we have excellent relationships with our regulators. But before what was happening in Ukraine, we were already pretty well positioned. So. But what was mentioned before is like crypto's not really anonymous, right? At one point or another, it's not
terrible
anonymous.
for criminals.
Right, exactly. So I mean, Paolo, you guys know like who's the young Russian couple, for example.
3.6 billion reasons to know. Yeah.
Yeah.
I want to talk about that next. Yeah, you guys go on that, please.
It's not anonymous at all, right? And so especially when you're trying to get like the fiat gateways, right? Like when you want to convert it to something that you could use in the real world, quote unquote, right? And there's and it's going to, and the direction that we're going is going to be even more so, right? So if you guys are familiar with the FATF travel rule, right? So this is a regulation from FATF that every single crypto transaction from one VASP to another, the sender and receiver information needs to travel along with it, right? And so the industry, regulated and licensed industry across the world right now is trying to figure out how to, on a technology level, how to solve that problem, right? Like, so as rightfully pointed out before, like blockchain technology doesn't have this built in. So we have to build a layer on top of it, or a framework on top of it, to be able to comply with this regulation. And these are, real technical challenges that we must solve for, because it is mandated by our regulator. So it's always never a dull moment in crypto. There's our backlog, our technical backlog is always deep.
Yeah, I gotta ask you, Paolo. So I'm sorry, I don't mean to interrupt. I just have to ask you. When you saw who the hackers were, after all of this, $3.6 billion, you've been dealing this for years. When you saw like it was Ra's al Ghul or Razzle Khan or whoever the like performance rapper was behind it, I mean, what went through your mind? I'm sorry, I didn't mean to take it where you were going somewhere serious. It blew my mind. I couldn't believe it. I can't imagine.
No, I couldn't stop seeing the videos. I mean, even in my time, I had to spend the entire night to see all the videos that were out there. So it was, I think that one important thing to point out is that I think she's a really good social engineer for sure. So, the fact that you were making funny videos and, not sure if she was intending to make serious rap music, but
I'm
a heavy metal fan, right? So I'm not able to appreciate that style of music, but I believe that she's really competent in social engineering skills. That is, she had actually quite few educational events in her career about this topic. So I think that I kept watching videos and so on, but also I have been following her work. Well, after I got to know that she was part of the investigation, of course, I started following also their more informative content, and definitely I think is the person that knows her stuff, right?
People asking who we're talking about. We're talking about the Bitfinex hackers that Paolo's been probably chasing for how long?
It's 6 years.
It's unbelievable. In
But
a million years,
that
I can't imagine that was going to be the person. I just couldn't imagine.
That's exactly the point I was making, Chris, before, right? So the good thing about this technology is that there are many tools that are built on top of it that will arrive to the place, or to add features that are not available in the base layer. So Also, back to the Tether side, we are of course working with regulators. With Bitfinex, we are implementing the travel support to the travel rule as well. It's all required by regulators, right? We cannot like randomly do stuff and affecting hundreds of millions of people just because we want. It's about providing also a safe service, and a service that is, and every single control has to be discussed with the regulator, right? So it's important to, and there are so many new things that are coming out of regulations and regulators across the globe, right? We are seeing US, of course, US has been quite positive, at least with the recent executive order, in suggesting that there is an interest from the US to push on the adoption of the technology, but also on the regulatory side, on the ability of ensuring that transactions can be, malicious transactions can be traced, and there is that the Bitcoin cannot, and crypto in general, cannot be used for malicious activity. So that's also, in our case, I mean, we have seen in many situations this happening, right? So for many years with Bitfinex and Tether, we helped regulators to catch guys that stole funds from even DeFi projects, right? Tether froze $150 million to people that were scammed over the last 18 months. So they were hacked and so on. So that's proof that when regulators want to take action, or law enforcement want to take action, they will reach out to us, and we have to comply, right? We are a centralized stablecoin. We are a centralized exchange, as BitFlyer is a centralized exchange, and all. If you are dealing with regulators, you have always to have a healthy relationship with them, and also that will come with the good side of things, even better side of things. That is, they will help you, as happened in the US, to when you are in trouble. We were in trouble in 2016. We started the discussion in 2016, and it took some time, of course, but it's for the entire Bitfinex team, this has been an epic moment, right? It took a toll on many people, that moment, when the exchange was hacked, and nowadays we see the hard work that the team made over the last year avenged.
And what happens to the funds now is the question everyone had. There's still been confusion as to what happens to the funds. I love that Michael Saylor was like, the U.S. government now holds Bitcoin on the balance sheet. Not really.
So we have to see how the trial goes, right? So the funds are in the hands of the DOJ for sure. So, but we are confident that there is a clear path to see the funds coming safely home.
That's nice.
Yes, it is.
Yeah. So and so now we were talking about obviously Ukraine and Russia. So we've got obviously the two sort of large news stories there is that now Ukraine has seen over $100 million in crypto donations, right? Which of course then sparks a whole new flood of evading sanctions and all the things, right? But we all know that it's being used for good, $100 million. And now we have officially that basically crypto, with some nuance, is legal in Ukraine. What do you make of everything that's happening there and what it means for us sort of moving forward?
I saw that. I didn't quite read into what it meant. When I thought I saw the same headline a couple months ago when Ukraine
now it's like legalized. Officially signed. I think they passed it, and now he's been busy, unfortunately, but it's been signed. Right. Yeah.
Okay. All right. Yeah, I haven't quite, but that blows my mind, and I'm super pleased to see the global response and the support, and especially using crypto to do so. That makes it super easy for individuals to large organizations, a very seamless, frictionless way to support directly what's going on over there. So it's without understanding the letter of the law. Just my overall feeling is very, very supportive of how it's being used in this context.
Yeah, a lot of people are comparing it to El Salvador, but it's not the same. Right? This is basically a regulatory clarity for people to open bank accounts, exchanges to operate, and such. But then, like I said, you see all this good news, and then of course because we've run out of recycled FUD stories, right? I mean, China's gone, so we can't have China bans every time Bitcoin goes down, and we can still talk about criminals. People are going to use it to evade sanctions, right? Putin and oligarchs are going to use crypto to evade sanctions, and you get the Dubai story that people are trying to liquidate billions of dollars in crypto, the old OTC thing. Can crypto be used to evade sanctions, or is that something that is a concern on a large scale? You guys would know better than anyone, right?
I think that it would be extremely risky for an intermediary to help someone to evade sanctions, right? For everything that we said before. So I think that there is so much scrutiny and there is so much back and forth with regulators. For I'm talking from a centralized exchange and centralized stable coins, though. So there is so much that can be traced. There are so many risks if you are not complying with the regulators that I cannot imagine some healthy actor in our space really taking on so much risk. Then maybe on a really tiny scale that might happen, but I believe that is we have really proven, you said it yourself, right? We proved that with the right amount of time you can trace everything, even people that know the job, so they are in tech in crypto and they know the space, they are in social engineering maybe and so on. There is still ways to get to them. It's just a matter of time because everything is out there, and the risk of not complying with sanctions and regulations are quite high.
Yeah. I mean, as again, there's like you said, it's an open ledger. There's plenty of blockchain forensics services out there that tracks the movement. So yeah, like you said, it's a matter of time before we see the actual endpoint, and then once we know the endpoint, it could be backed out, and the entire history could easily be traced.
Yeah, the evading sanctions implies that the people on the other side are willing to take that risk, right? That's the people that think people don't know. It's like some random American is going to start transacting on a public ledger with Russians and, be in violation of international law. Seems pretty absurd to me. So I want to shift it just really quickly to what's actually happening with Bitcoin and price. You guys obviously both are at exchanges. What are you seeing in terms of volume, where it's coming from? Obviously, Paolo, even earlier you mentioned, I think, or Chris, the diminishing supply on exchanges. One of you were talking about it. Price isn't going up as a result, right? So does that mean that we're seeing diminishing demand on exchanges as well?
On my side, I think that we are seeing in general. So on Bitfinex side, the supply is quite steady. But definitely we are seeing the liquidity on the sell side getting lower, right? Getting smaller. So at least this is what I'm being seen across multiple venues that I check periodically. That why does the price does not follow? Why the price does not increase is a good question. But I believe that the level of uncertainty of also from the regulatory side is one of the things that can affect, at least in the short term, the price. So, but the big actors are piling up Bitcoins outside of exchanges. But in order for the masses to jump in Bitcoin, again, you need to have additional clarity. I believe we have passed 1 year of full uncertainty with all the possible FUD about also energy, about regulations jumping into DeFi, and banning KYC, the DeFi pools. All this stuff really creates fear in the market, in the investors. So I'm not surprised that we are seeing the price at this level, honestly.
Yeah, for us, we have a pretty even split between retail customers and institutional investors, right? And so on the retail side, like we don't really see like a lot of like movement on and off for the retail customers. They make their cash deposit, they buy what they want, and they just hold on to it, right? And so they're constantly accumulating on recurring buys, scheduled purchases, right? So they just so they're not taking assets off the platform, off of our exchange. But the institutional guys, I think that there's rather than just market making on a spot exchange, for example, there's other very really exciting ways that they could invest deploy their capital, right? So that might be, they're looking for other projects, and maybe they have spun up like a VC arm that they need to deploy capital to. So we see a lot more like projects and like a reallocation rather than just taking it, off the exchanges. It's just being deployed elsewhere, which is, great for the ecosystem, great for the industry. I think it's pretty exciting.
I agree. It's interesting that you're seeing less people sort of taking it off exchanges on retail. Kind of means to me that exchanges over the years have become a lot safer, right? I remember when I first started, and I was only 2016, so it was much later, but it was always not your keys, not your coins, right? Buy it on the exchange, move it off. Exchange is going to get hacked. It seems like now for most people, maybe this is a controversial take, that if you have at least your basic security in place, your coins are probably safer on an exchange than in a hardware wallet where you're going to screw it up and lose it eventually.
Yeah, that's the fun there, right? Every few weeks, every few months, you see a headline about some guy that lost a scrap piece of paper or sent it through the wash, right? And then So
I trust myself not so much.
Exactly. Like I can't tell you how many times I've missed lost my cell phone after just cleaning my apartment out. So it's each individual's risk profile. I don't want to sound like I'm yes, hardware and the hardware wallets and to store your own assets. There's definitely a use case for that, and I wouldn't want to make it sound like I'm discouraging that.
I still think it's important. I just think that
viewers or listeners, I'm not discouraging.
I think it used to actually be true.
So,
I think it actually used to be true that maybe your coins weren't so secure on exchanges, and now with whitelisting and all the different ways you can secure your assets on an exchange, it seems like you don't really hear about people losing their coins on exchange unless they get outright scammed in the same way they would have gotten scammed in the real world anyways.
And in worst case scenario, we protect our customers, right? Like we are able to protect our customers. So like in the worst case scenario, our customers going to like we'll get the punch in the chin. We'll feel the punch in the chin more than our customers, to be quite honest. So
on my side, I'm of course more, even though I ran Bitfinex, and Bitfinex is really secure exchange, and we have so many tools and to protect our customers. The vast majority of the assets is in multi-sig with it's so it still is the educational part of keeping your keys safe is quite important, right? Because I think that the potential, one of the variables of the potential of Bitcoin is actually being in control of your own wealth, right? And even if it's not that, even if you are not putting all your wealth on a cold storage yourself or on a hardware wallet, I believe that the feeling that you have in holding your own wealth, right, or no one can touch it, it's just for yourself, and being responsible for it, right? People have babies, right? So they can also be trying to be responsible with their money, understand?
Yeah, but most people shouldn't be allowed to have babies. Let's be
You said it.
So, yeah, I did say it. No, but I agree with you. I think that's really important. For most people at this point, I think you could actually have a split, right? You have some that you keep for different purposes. Maybe you're earning yield somewhere, but you should have a feeling. And I think also, depending on who you are, for a lot of people, it's not the fear of the exchange getting hacked, but something happening to them and where would their assets go, right? I mean, multi-sig, for someone like me, probably someone like you, it would take me like a month to get my coins out of multi-sig. You're gonna have to drive me all over the freaking country to like get it, right? And so I think if you're in a certain position, you have to have that level of security. But your average person at this point can confidently like set up decent two-factor authentication, whitelist an address, and go safely. Trade
and if not even like an attack to the exchange, we have a lot of like fraud detection on the individual user's basis, so we could detect if a customer has been a victim of phishing, and we have a lot of like on not just like a brute force attack to the exchange, but on the individual account level too. We have a lot of security in place, so that's one of the things that we try to brand ourselves against is the security and trust that we have with our customers, right? At BitFlyer, at least, yeah.
Yep.
Do you think we'll ever get to the point where it's just like insured, like your stocks? You know, you're on E-Trade, or you like have FDIC insurance, like your bank account, and coins are on exchange or insured, and people just feel confident leaving them there? I still wouldn't, but I'm just curious.
It's going to be a while before we could get to that point, but yeah.
Yeah, and I think that definitely is going to be a while, and I still see the value again in pushing users to keep on exchanges what they need for. The exchange is a platform that should allow people to trade, and rather than being a bank, right? So I consider Bitfinex more an exchange rather than a bank, right? So if the educational part of being a bit, and at least understanding the ethos and why everything started, like starting in 2008 with the big financial crisis and with the diminishing trust in the banking system, is important that we don't lose that, right? So it's important that while, again, I'm in the business of running an exchange, so I appreciate how is important for many people that don't have the technical skills to protect their own assets. That's why we need to do wonders to make that happen for them. Still, it's we cannot forget why all this movement started, and that's also what we should teach to our nephews.
I agree with that. I absolutely.
I don't know if we need to teach it to our nephews. The nephews need to teach it to us.
To us, like that's the problem, right? And we're all going to age out anyways. We always talk about like having everything secure, like so that grandma understands it. But the reality, I mean, the sad reality is, and I talk about it too, right? UI, UX, and it's too complicated. The fact is, they're going to age out, and the people who are going to come in understand this better than already we do. Your average 15-year-old is not going to have a problem transacting digitally.
I live in Miami, and so I often go to quote unquote like hacker houses where they're doing really amazing fast work in DeFi and Web3, and the depth and the level of their conversation. These are like kids in their early 20s. Far outpaces my understanding, which I hate to admit that to all your viewers right now, but it's it's really amazing what some of these kids are actually doing. But the flip side of it is there's a lot of risk to that as well.
I'm a boomer, man. When I was 18, I went to college, and they said, "What do you want your email address to be?" And I said, "What the hell's an email address?" So I have no point of reference for that. At all. Well, guys, we're here, where we've reached the finish line. I want to thank you both, guys. Paolo, where can people follow you on Twitter or keep up with what you're doing?
At Paolo Ardoino on Twitter.
It's his name. It's right there. You guys just read it and then type it in. And Christopher, yours is reversed. Yours is tricky.
Yeah,
right?
That's
Temme
right.
Chris.
Last name first. Temme Chris. That's correct.
So obviously you'll be in Miami next month. Paolo, are you going to make it for the Bitcoin conference?
Unfortunately, I can't, because I already have Paris and a few others that I have booked and a few other meetings. But I would love to come. It's going to be the most massive Bitcoin conference, right? So
it's insane. I mean, last year they did it at Mana Wynwood, which is, I think, can host about 9,000 or 10,000 people, and like 14,000 showed up, and it was obviously a shit show, but a lot of fun. But this year they moved it to the Miami Beach Convention Center, which is absolutely massive. I can't imagine the scale. I think they're expecting like 30 or 40,000 people this year.
Yeah, for scale, it's the same venue that they have Art Basel in, right? So it's absolutely massive. So
yeah, it's basically Coachella, right?
Yeah,
it's gonna be huge. I love it. I just came up with that. I think I'm gonna trademark that when we get off here. Well, thank you guys very much. I'm gonna say a few more words to everybody. I appreciate you guys, and we'll do this again soon.
Okay.
Thank you.
So, guys, listen. I want to ask you. This is gonna be fun to ask you this question. Should we keep the time at 9:30 a.m. or should we go back to 10 a.m.? I want to see your comments. 9:30 a.m. or 10 a.m. We switched. Because obviously there was a time change and because it put us right up against Crypto Banter, but it seems like now people are like 9:30 sucks, bro. Oh, look at you guys. 9:30. Okay. I'm expecting the 10s to flow in aggressive. A lot of 9:30. This is anecdotal, but it feels good. Crypto Wealth just threw in a 9 here as if that was even an option. This is not a write-in vote. You can't like say, oh, who do you want to be president? Pee Wee Herman. Oh, I voted for Pee Wee Herman. Fuck off. Yeah. If you do 10 a.m., you might clash with Pomp. I mean, whatever. Yeah, maybe. 9:30. Jared would like you to know that he's okay with Temme, but he'll be here. Appreciate that. Yeah, 10 a.m. West Coast, it sucks. It's like better for Europe and Asia, worse for the West Coast. This is giving me barely any clarity. No, shouldn't have asked. Niner, you're in a walkie-talkie. I cannot access free newsletter, only paid. That literally makes no sense, but they're in the newsletter right under the table of contents. You can email, I think it's premiumsupport@getreview.co. You holler at them. 7:45. I mean, that's literally not even close to what I asked you. Dougie and Bella will be here no matter when. No matter when. No matter when. Yeah, you're cool with either. Up at 5 a.m. I was up at 3:40 a.m. today. You know that your situation in life is slightly different when your wake-up time is earlier than your previous career's bedtime. I used to go to sleep between 4 and 5 a.m. most nights when I was DJing. Now I'm awake before 5 a.m. Yeah. Yeah. 12 o'clock on Sunday, Sly, you're appreciated, but shut up. You're on the fence. That's really useful. Thank you. Yes, I am a savage. I am not a human person, and I don't do the sleep because you need sleep. You live longer. I don't need to. Why do I need to live longer if I wasted all of my hours sleeping? I get it. I know sleep science. I'm going to trigger you guys, but like, these are my best years. This is not going to last. This is a human male in his prime. Take a gander. Look deep. Right here. Think I'm going to be all this when I'm like 75? Oh, I'll add an extra year to my life because I slept 4 million more days of my life earlier. Great. I don't want to be asleep. I want to be awake. I want to be alive while I'm young. Whatever, man. You guys didn't help me at all. Like, you actually kind of made it worse. Yes, Eastern time in the Easterns. Do people still do DJ? Hell yeah, they do DJ, bro. They just don't do it with actual talent, skill, or cool equipment. They just do this, and they push play, and they play a mixtape. Yeah. I didn't even know you had a time. I just connect when you tweet about it. That's what I'm talking about. I'm not grumpy, bro. Told you, I'm in my prime. You can't fuck with this. You want some more of that? See the gray hairs? Your mean comments are what are giving me those. Yeah, don't you do DJ? I do DJ. Wait, is this Steve Wonder? You here? You doing DJ, Steve? Is that you? Bro, all the old friends coming through. If that's you, legendary DJ in the house. Steve Wonder, not Stevie Wonder. He doesn't DJ. He just harmonicas and drums and sings and everything else. Pianos. Steve Wonder. That's you. Haven't seen you in a long time, man. Hope things are good on the West Coast. Yeah. I don't know. Do BJ, that's different. It's different. Hey, are you the dude on Twitter that is Cartman and sends me a South Park meme like 15 times every time I post? Because I appreciate you if that's you. That's awesome. Not the same dude. It looks like this is the signature, but Wonder 78. That's better. That's your tag. I dig that. Yeah. So guys, I don't know. Said differently, the only sign up that your link below links to is one that requests credit card. Oh. Hey, Mike, if you're there, Mike, we need to change the link in the descriptions to the one that goes specifically to the free one because this link's apparently fucked up. Crypto Carvin, I love you, man. I'm not ADHDing. This was planned. I'm actually reading a script right now. I don't know if I'm the best YouTuber, but I think I'm just not a YouTuber. So I'm just a guy who shows up on YouTube, but I don't try to YouTube. Favorite Wu solo album? I don't know. Liquid Swords, Cuban links. Probably only built for Cuban links. How about you? How about you, Evan? Yeah, check my tweet from today. Legit free link. Mike is great, man. Mike's good. People asking how he's doing. Yeah. Yeah, that's why. Like my pronouns. Me, my, mo, mom. I smell the. Can I explain this ape coin thing? I'll give it to you real fast as much as I could. If I was a YouTuber, I would go and I would like, and I'm not hating on YouTubers, it's great. And I would like tell you about the next gem or whatever. You know the next gem as good as me. I don't fucking know. Ape coin. So if you had to buy a Bored Ape or a mutant ape, they started Ape DAO and they did an airdrop to anyone who holds it. It's like 10,000 coins per Bored Ape and like 3,000 coins per mutant or something dropped to your wallet. They launched it like $20 each. So it was basically only for a second, but you got like 200,000 free dollars for your 200,000 for owning a $200,000 ape. That's tight. But then the apes immediately dumped and so did the coin. I haven't checked it of late. Liquid Swords is good. Yeah. Thanks for the stream, Scott. You're welcome. Yeah, Cuban links. Him, DJ, ADD DJ. More people need to give fewer fucks about what people think. I mean, it takes a long time to get there in life. I used to care a lot. Now I care less. Now I care less. Yeah, guys, speaking of, someone said they love the stream. Speaking of streams, I really need to go to the bathroom. So listen, we're going to stay at 9:30, I think. It's just whatever, man. We're here. And just get used to it, you know? I was going to do the old thing. We're here. We're queer. Get used to it. And then I thought I might trigger some people in the comments or something. I don't know, man. But now I just fucking said it anyways. So I should have done it. I had my moments. Yeah, tomorrow morning, back to the normal kind of stream where I do the streaming. But until then, my shib says peace.
That's dope.